Let's get started talking about the topic for the day, the new good faith estimate 2010 that was effective the first of the year. On the screen in front of you is page 1 of the new good faith, page 2, and page 3. You notice I said 3 pages. In the past, if you bought a house or refinanced a house, the good faith was only 1 page long. Now we're dealing with 3 pages. I want to take a moment to explain the premise behind the new good faith per the government. The government wanted more transparency for the borrower in order to show them exactly what they are paying for their loan without last-minute surprises, while also offering simplification and a reasonable time frame for borrowers to shop. The key statement there, without last-minute surprises. In the past, the rate or closing costs could change on the borrower at the last minute, and the government does not want that to happen anymore. I've highlighted some key things that are going to distinguish the old good faith and new good faith, and I'll go through those quickly. The old good faith, 1 page long, itemized costs line item by line item, showed costs and credits for items paid by others, specifically the mortgage broker, the realtor, or in the case of a purchase, paid by the seller. Total cash to close, total monthly payments. Multiple good faiths could be issued and revised for any reason throughout the loan process. Now the new good faith, 3 pages long, bundles costs together in a lump sum manner, shows total costs no matter who is paying them. Monthly payments displayed do not include taxes and insurance, only principal, interest, and mortgage insurance, and only 1 good faith is issued, and that good faith is binding on the loan originator and can only be changed in limited circumstances. Now, as a loan originator, I must provide a good faith within 3 business days of receiving an application. HUD's definition of an application is borrower name, borrower income, borrower social security number, the property address, estimate of property value, and desired loan amount. Now, without these 6 items, I will not issue a good faith because that new good faith is binding on the loan originator. I have to guarantee my costs and my interest rate. I want to highlight 3 key items. There will be no total monthly payment displayed on the new good faith. You'll find that on page 2 of the loan application. No total cash to close. You'll find that on page 4 of the loan application. And the borrower does not sign this new good faith estimate. The government did not want the consumer to perceive this as a contract, so no signature is required. So now let's take a look at the first page of the new good faith and highlight a couple key items, specifically the important dates section, items 1 through 4. The interest rate for this good faith is available through a specific date and time. As many of you are aware, or maybe not, you're not aware, interest rates change hourly, sometimes 2-3 times an hour, sometimes 2-3 times a day. So the interest rate quoted, since this is a binding interest rate, the interest rate quoted has a specific deadline, and when I'm quoting an interest rate, that deadline is that day because of the changes that happen in the market. The second item is the estimate for all other settlement charges is required to be good through 10 business days, not including bank holidays. So from whatever date I take the application, the settlement charges have to be guaranteed through 10 business days from that date. And number 3, the interest rate lock period typically is 30 days, but that can be 45 or 60 days or potentially even 90 days depending on the lender. And then item number 4, you must lock this interest rate at least 10 days before settlement. That's a key item because interest rate lock is a changed circumstance, and the government requires a new good faith to be issued when that interest rate is locked. Finally, on the summary of your loan, you'll notice the initial loan amount, the loan term, the interest rate, the principal, interest, and mortgage insurance, and then specific items, whether your interest rate can rise, whether this is a balloon payment, prepayment penalty, if you make payments on time, can your principal change, Can your loan balance rise? Those are some key things to be aware of on this new good faith. Now we're going to look at the escrow account information is displayed, the amount of funds held for property taxes or other property related charges. And then finally on the bottom of page 1 is a summary of your settlement charges. Your adjusted origination charges include the appraisal, the processing fee, and the lender underwriting fee. And item B then includes item A plus any origination or any broker yield spread premium, and that's how the broker is paid. So that's included in item B, and then A plus B equals your total estimated settlement charges. So that's a very key item that I'm asking you to pay attention to. Page 2, at the top of page 2, understanding your estimated settlement charges, again, it's going to highlight any origination charge that is charged, and then if there was a credit from the lender as far as the yield spread that the broker is paid, that is then going to be reflected in that line item. And finally, the one last item I want to highlight for you is the instructions. The instructions help you understand which charges can change at settlement. Some charges are specific and have no opportunity to change, i.e. the origination, the credit or charge for the specific interest rate, adjusted origination charges, or transfer taxes. Those items are locked in and cannot change. There are specific charges that have a 10% variance. Items that, as a loan originator, I'm required to provide you a list of settlement service providers. If you choose my settlement service provider, that charge can vary by no more than 10%. If you choose your own settlement service provider, that charge can change by any amount. And then finally, the charges that can change at settlement, specifically title services, owner's title insurance, and daily interest charges, homeowner's insurance, or the initial interest deposit for the escrow account. Again, this is displayed on page 3, which gives you an idea of specific items that can or cannot change. In summary, this new good faith has some good aspects about it. Specifically, the guaranteed rate and guaranteed closing costs cannot change and binds the loan officer. That is one of the best things that the government has created in this new process. Some of the other things are questionable as far as value, but again, we'll let time tell the story there. If you have questions or are looking for any advice, please call Terry Williams, Dundee Mortgage. Thank you. You know what? I think, using some pretty slick software, but I think that I need to unlock this software. So there. Now that probably didn't work either. So be patient with me. Shift and there. If you have any questions regarding this, I apologize for that little snafu with the software, but call Terry Williams, Dundee Mortgage, if you have questions with the new good faith estimate. Again, thank you for your patience and your time.